evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, the 18th of February, 2025, about 6:35 p.m. Central Time. So what an interesting day. The stock market was everywhere, but basically higher again. Some of the markets getting very close, as you know, to all-time highs, and it just keeps chugging along. We had a rally today in the energies, and that didn't surprise me. Remember, the U.S. and Russia met, and as they met, it was agreed to nothing. In other words, they both listened to the other side. It was a 4.5-hour meeting. The good news is that the U.S. and Russia have agreed to reestablish at least communication. No sanctions are coming off. You know, if people think one meeting you're taking off sanctions, no. The U.S. will say sanctions are going to stay on until a truce deal is reached. President Zelensky of Ukraine is offended that he wasn't at the table, and I understand that. The problem is there's a time and place for him to be at the table and for Europe. During the 3 years of fighting, nobody could get Putin to a table. President Trump did, simply put. So let the President of the United States or his representatives and Russia's at least get a common ground to talk about, then you can bring the other people in. Cooler heads, everybody prevail. Everybody's going to have a seat at this table, and nobody can force Ukraine to do something it doesn't want to do, except they can't defend themselves if everybody cuts off aid to them. And that's the reality of the situation. All right, there's a lot more. Let's go to the news, and then we'll come back here. You're going to get the mortgage market numbers in the morning at 6 a.m. The housing starts and building permit data is going to come out at 7:30. Red Book weekly retail sales come out at 7:55. The FOMC minutes from the January meeting at 1 o'clock. API numbers at 3:30 p.m. President Trump confuses me. I admit it. I am confused. Now it's 25% tariffs on autos, pharmaceuticals, and chips. What happened to the reciprocal tariffs? All last week, if you charge 25 on us, we're going to charge 25 on you. If you charge 10, we're going to charge 10. But today it's 25% on autos. You know what this is all meant to do? It's meant to be confusing. And the reason is it's called keep the pressure on. Send your representatives here into the states to talk to my staff. If you don't, I'm just going to keep saying, and while it could have been reciprocal, maybe it'll be higher. He already said on certain pharmaceuticals, why stop at 25? Why not go to a higher number? I'm telling you, pressure. The man is a negotiator, and the whole idea in a negotiation as you head into it, keep you off balance, all right? That is what he's trying to do. Howard Lutnick, to nobody's surprise, was confirmed today by the Senate as the Commerce Secretary. He'll have to divulge himself of a lot of his holdings. He's a very well-to-do man from Cantor Fitzgerald, and if you remember 9/11, quite a company, and he took care of a lot of people at that point, to be applauded for all the good things he did. So you've got all that going on. I mean, it's a heck of a lot as you look at all this. So when I looked at the market today, it was interesting. You were trying to break most of the day in the Dow, the NASDAQ, and the markets did hold on pretty well. The gold market back to the 2950 level. Finally, Goldman Sachs joined the party now at 3,100 is their call. I think UBS was closer to my call of 3,000 an ounce. I think I'm going to be shy if inflation comes on because of all these tariffs that are coming here. It's always hard to predict. I have a reason that I came up with 3,000, and you'll see it. I don't know what the other reasons are. On the currencies, they're all over the board. I keep seeing Japan and what they're doing, and I question, their trade and the trade imbalance they have with the U.S. and what that's going to do in the marketplace. The soft markets reopened. You finally had a loss in coffee, not a very big one, but you did have a loss. And on the energies, I'm still looking very hard at soybean oil. That is the market that I've decided to hone in on because I happen to think there's certain things happening in biodiesels and so on that could be very friendly to this market, especially with tariffs on rapeseed and other things could get to be exciting. But the chart action is good. When we look at the S&P, as you can see, if you finished here, would this be the highest close? I believe so. If you finish. Tomorrow's going to be Wednesday, so we have the rest of the week to go. I drew these lines yesterday. I bolded them up today. Some people told me that they were too hard to read. So generally what happens with a market like this is this pushes on it until you reach an apex point, then it tries to push out. Are we close enough? You could go further into that apex is what I'm saying. The pattern on the chart away from that is higher lows, higher highs. That is certainly bullish. When you look at the 18-day average of closes, you're now over it 4 days in a row. That has got an upside bias. The resistance should be one of the resistance points, the upper Bollinger Band, which is right here at 61, 63, 75. So you're about 12 points away from that in raw figures. And you're overbought trying to embed. Now, it will take 3 days in a row of these markets staying over 80 to embed. Embed happens when you convert. Let me just show you right here. When you convert, in fact, today would be the second day. I'll show you this. On Tuesday, you finish with both numbers over 80. I know I'm talking to you on Tuesday, but we're in Wednesday trade already. If I go back another day, forward rather, you can see today you're trying to get your second day in a row. If you can get 3 in a row, you convert from being overbought to embedding. And when you embed, it's not unusual for the price action, for momentum to say price is even going to go higher. But most times you don't embed. Most of the times overbought markets correct to get rid of the situation. So I wait. Back here you were trying to embed. It didn't work. You tried to maybe get the numbers down here. And here when you did embed, you didn't stay up that long before a correction happened. But we're in rarefied air up here. I mean, think about how high you are in these markets and where you're at in them. Valuations, the like, interest rates, even when they climb, the market has gotten comfortable that the market's staying in, let's call it a 4.75, 4.8 level on the 10-year note down to the 4.4 level. And it seems to quickly have adjusted that it's going to stay in that for a while. We'll see what happens. When you look at the March micro NASDAQ, higher lows, higher highs, keeps hitting the upper Bollinger Band. What's the difference here? The difference here is the market is embedded. So the breaks like you had intraday, interesting, but you're not scaring anybody out. In order to scare them out now, the red line's got to close under 79. Otherwise, the breaks in the market likely get bought. In the Dow, whole different world. Notice how it's not even able to hang on to the 18-day average up or down. It's just whipping back and forth and developing sideways action. And you're still in the bearish camp to a degree in the Russell. You get a day up and over the market, comes down, comes back over. Now, it could, if the market were to start getting up here over 23.05, give you the first lift. But you have a lot of resistance at 23.14 to 23.27. I just don't see anything in that. In the 10-year, by the way, I stopped covering the VIX here because it's not moving. If we had a lot more volatility, I'd bring it back. In the 10-year notes, lower highs, lower lows, bearish. Okay? So when you're coming that way, what happens? Interest rates climbing a little bit. Same in the 2-year note, staying under the 18, but not trending. Only the bond market was trending with lower highs, lower lows. As you come into the 2-year, you don't have it. If you go to the others, you'll see what I'm saying. In the dollar index, I am still in the bearish overall camp because you're so much under the 18-day average. It's not trending down. It's broken down. There's a big difference, and it's already oversold. Does it embed? If it does, open your mind up to possibly getting down here. If it doesn't, then the resistance at the 107.60 level. That should be where the market goes to. In the euro, you weren't quite able to get up here. Now, is all this defense spending that the Eurozone is going to have to do of its member nations bullish or bearish their economies? You have to start thinking this out. They're going to have to float euro bonds or something in order to fund what they have to, because the shots across their bow that the U.S. isn't going to fund everything for NATO. They've got to meet their, I think it's a 2% minimum GDP. I think it should be 3%, to be honest, but 2% is the goal, and many of the countries aren't doing it. But in order to do that, that means munition plants might fire up. It might mean armament plants of different types will go. They have to build tanks. They have to build shells. They have to do whatever they're going to do, missiles, so on, so forth, airplanes. I can go on and on for you. That should be friendly to the economy in some ways. All right, we will see. All right, but I question if that isn't going to be a turning point for them to get the economies going. You know, that doesn't mean I'm right, but they're not in war. But from the U.S. point of view, they are in war. From the U.S. point of view, the shot's been fired. If you don't do anything, we won't. You get overrun. That's one way to look at it. Not a pretty way. The British pound continuing on its play, staying over or at the upper Bollinger Band. You now have the Gorilla Glue trade, which means 4 days in a row where you're hitting that band. You're not trending, but as this occurs, you start pulling on the slow stochastic, trying to make it embed. Next target, if that continues, maybe the 127 area, the 100-day average in green. Remember, the 18-day average is always in red here. Green is the 100. Gray is the 200, and Bollinger Bands are the black. You have the higher high, higher low. I don't see anything in Bitcoin. It is getting oversold, and that's about all you can say about it. In the energies, you've turned the trend up in Brent. So no surprise here. You didn't come to a deal where Russia's oil's coming to the market. I didn't expect it. I told you, expect nothing out of this except the breakthrough where the U.S. and Russian diplomats can talk again. And that's all that you're at. You're at a key resistance point in the market of the 200-day average, the 100, and you're pretty flat in momentum. But the trend is up, and theoretically the bias is up. So until today's low is taken out, as long as you stay over that 18-day average, you have a shot at further gains. It's similar, not quite the same, but similar in the WTI. First off, the 200-day average and the 18 aren't together. It's been a resistance point, and you're right up to it. We'll see if the market can build on it. But again, the trend is up. The bias is up. Same in heating oil. And in natural gas, I was surprised today that the market lifted again. We're already seeing that this cold vortex that is going through everything ends soon. And next week in Chicago, we're in the 40s. So at this time of the year, you have shorter and shorter cold spells. So as bad as it is and the market runs up and buying over an upper Bollinger Band, I wouldn't have my enemy do it. Doesn't mean that the market can't go higher. I wouldn't have my enemy do it. I'm a nicer guy than that. In other words, I think the market is getting the Johnny-come-latelys in, and I'd be a bit cautious. I'm not a bear. I don't want to be a bull at this price. There's a huge difference. The good news for natural gas is there's a lot of people coming to the U.S. that want to buy into U.S. companies, want to produce natural gas here to avoid tariffs. You do understand what I just said. That is already going on. And you have to start reading the papers and understand that that is going on. This is just what the president wanted. He wants foreign investment in America. Keep your eye on all that. Those are good things, not bad things, as I see it. Now, here's another good thing for you. I'm ending tonight. It's 6:30 now, so in about four and a half hours at midnight Central Time, the free offer from my website, I guess it's 5 hours almost, goes off in terms of you can get 2 weeks access to my to my research, be it the morning ETFs, the morning futures, my full twice daily written updates, if you have had a free offer before. Now, my subscribers get this anyways, but if you're a freebie, and there's plenty of you out there, I normally, for a minimum of a year at a time, you can't come in and get another 2-week offer. Sometimes I don't even honor the 2 weeks. I'm honoring it for everybody. I said over President's Day, it ends midnight Central Time. I will not accept it at 12:01 a.m. tomorrow. Got it? It's that simple. You can get all the other parts that we have. Take price counts, learn them, take a look at what we have. Our clients get access to this. You want to play with that. You can go to iraepstein.com, free offers. There'll be a cursor up here. Give it a click and away you go. I'm Ira. I'll catch you in the next update tonight or, by the way, in the morning when I do the refreshes of everything. You have a good morning. Good evening.